The content discussed in this podcast is for informational and educational purposes only and should not be construed as financial or mortgage advice. Always consult with a licensed professional before making any decisions regarding mortgages or financial matters.
Welcome to the Canadian Mortgage Show. Here are mortgage professionals Alex Pang and Alex Shanks to cut through the BS and educate Canadians on all things mortgages and real estate.
Welcome to another episode of the Canadian Mortgage Show. You're listening to episode 40. Alex Pang here alongside my co-host Alex Shanks. Alex, let's tell the viewers and our followers we spent the day together yesterday. What's that all about?
Yeah, it was pretty awesome there, man. But I mean, we got to show everyone. We got some nice closing on. If you can see it in the video there, we got the Canadian Mortgage Show some merch only available for Alex and myself here right now. But I sponsored a golf tournament for some realtors in Vancouver, and Alex was kind enough to come and join with me. And I mean, it was me and Alex, we don't work for the same mortgage brokerage, just so everyone understands that. We're both our own brokers and everything, but we're here to work together. And I mean, I will say this, Alex, like I would not have been able to do what we did there yesterday without you. I would have showed up. I forgot business cards on the way when I left from Vancouver Island. I wasn't going to bring a table. I wasn't going to bring chairs. I wasn't going to bring a battery. I would have sat there on the grass and been like, shit, all right. So, I mean, I can't tell you how much I appreciate what you did for me on that. And it was just so great to hang out with you, chat with other people. Obviously, I was there kind of promoting my business, but you were helping me promote my business. And then we got to talk about the podcast. So it was an amazing time, man.
I mean, I sponsored a realtor golf tournament last year. And so I've kind of learned from experience. You shared the email that they were going to provide a table and chair, but I'm like, trust nobody, expect nothing. And so bring it all. So I'm like, I was telling you on our own chat, like, yep, I'm bringing everything. I'm expecting nothing. And then when you mentioned about, they have an extension cord for power. I'm like, extension cord to where? We're in the middle of a hole. Is there a plug in the ground to the matrix somewhere?
I believe people when they tell me, and I mean, I don't know if people can see, I am a tiny bit red. The one thing I can say is Alex didn't help me put sunscreen on. He didn't bring any sunscreen for me. Like, what the heck?
I was your work wife yesterday. I had everything covered, but not the sunscreen. So I actually put on sunscreen early in the morning, 8:30. And you know what? You don't really see it on the video, but I felt my face kind of broke out a little bit. So I can tell that I might have, gotten too much sun. But it was a long day for us. Why don't you detail the time when you left your house?
My travel. I mean, we've talked about this is almost the same kind of timing, even a little bit longer when I came over earlier this year when we went and saw each other to the Canucks game and stuff. I left my house at 4 a.m. to go catch the earliest ferry I could. Drove all the ferry all the way to Alex's house so we could get all the stuff that he had set up for us. We then got to the golf course, got everything set up there. And I mean, we were there from 10 a.m. till 8:30, I think is what we were there till. And it was
a long day, but time actually went by pretty quick. It was pretty slow in the beginning because everything was set up. And by the time things got going, the golfers were all pretty exuberant and they were going to be drinking along the way. So the first half, or I would say the first 2/3 of the round, and how golf tournaments work, they work in a shotgun mentality. There was how many? There was 140 people, you would say?
Yeah. So people playing in it. Yeah.
Usually you have each team starts on each hole. They all play 18 holes, but it's a shotgun approach. So it's all done in 5 hours or however long it takes to finish. Now, there were more than 18 teams, and I believe there were some that had 2 teams per hole. We started off or had a team that had 8 people to start off with for us. And it just kept coming wave after wave. And thankfully, we were placed on hole number 1. And there was a kind of a coffee shop close by. So perfect for bathroom breaks. And we
in the bathroom
had some beer while we were working. So it was kind of good.
Yeah, exactly.
And there was one moment where Alex picked up a phone call. And he was on the phone for close to half an hour. Groups were coming. Yeah, it was 23 minutes, but it felt like half an hour. And so I looked over, and Alex is a pacer. He doesn't like, you can just sit here and talk. I'm okay with that. I'm like, it's all confidential and stuff. But he's a pacer. He walks off, 30 feet away, pacing back and forth. And there's a group coming. I look over. I'm like, okay, I guess I'm doing this by myself. So, offering our branded bottled water, got them to play, what's that game? Cornhole. Yeah. Yeah.
We had
Yeah.
cornhole set up for them. So just, even though I'm 6'7", so the thing was, if they got one in, they got two of my leg lengths forward. If they got two in, they got four. And so it's just a fun game to give people a little bit of a better
Exactly.
hit
And
off the
got
tee.
everyone to, Alex is doing a draw for,
Giveaway.
a Visa gift card getaway to, put in their business card or put in their info. And Alex, I don't think you've done the draw yet, but
Yeah, but I got to put everyone's in. I still, again,
there were
I
periods
just
where
haven't
Alex
had time.
was, I think his exuberance was kind of waning. So he only did like one of the two of the things. I'm like, buddy, you're paying for this. You got to get through every single thing for every single person.
Oh,
And you got to read the room. If they're not
man,
interested, just leave it.
But Alex, you're a cold hard killer salesman. You're like, water, draw up here.
Do you
Let's
want
go.
water?
Like,
No, save it for
shit.
later.
And I'm like, I gotta follow.
Okay,
Up.
the water's about our pod. We're talking about mortgages, and a lucky person, a lucky realtor can come on as a guest interview. We can talk about how lucrative pre-sale markets are, and everyone was laughing about that one. But yeah, it was a good time had by all. It was a long day, and Alex actually did stay over at my house for the night, and you got up at 4:30. Or no, you got up at 4:15, and then I had to let you out at 4:30.
And I had to make Alex get up too, and that's supposedly he likes to sleep in till 8 or something. Is what his wife was telling me.
I did have to go back to sleep, and it was a long day, and so it was a pretty rough day for me. But the show must go on, so we need to get into this, don't we?
Yeah, let's talk about it. Obviously, we all got the the social media videos everywhere with every single person. The Bank of Canada did not cut interest rates. Now, I'm going to talk about, like, at the golf tournament, a lot of people were talking about, why didn't rates get cut? I was very surprised by that, Alex, that people like actually thought that rates were going to get cut there. Like, I mean, we probably been talking for the last 2 episodes that like a rate cut's not going to be happening.
I mean, like if listening to us probably about 2-3 weeks ago, the odds were a lot higher. It was sitting at about 2/3, but recent reports have shown that even though like the economy's soft but not dramatic enough, and that some segments are still strong in the economy, which obviously lowered the odds to like 30-35%. And I guess people I've listened to, all the economics and more of the analytics side, agreed. And yep, the likelihood of a cut's not, but it goes on to say the next July announcement, July 30th, the odds of a rate cut is currently at 55%. So there's going to be about 4 data points or economic reports coming out between now and then. So we will see. But funny enough, like even before it, it's not on our agenda, but I was looking at on X there, and apparently Elon and Trump are in a feud right now. I'm like, shit. Is this imploding? This whole Doge thing?
Exactly. That's like, I mean, it's like you brought some stuff up, and it's like, I mean, that's where I think Elon helped him in a sense, and now it's like, ooh, this is we got some big social media drama.
Like, Elon has promised Trump certain things, and Trump has brought in Elon to be part of the whole bureaucracy or the Doge thing. And is Trump backing?
No, like I think he made a bunch of cuts, and they were going to save a bunch of money, and then like Trump came out with this big beautiful bill and like just jacked up all the spending, and it's like, well, what about all this work that we just did? And so I mean, I think we're kind of upset that. I think the dynamics has changed a little bit. I mean, maybe even Elon's been like, oh shit, maybe have I partnered with the wrong person? Because I mean, as we all know, I saw on social media, since they started posting those things, the search on Google of how to remove stickers has skyrocketed because everyone's put stickers on it that I bought a Tesla before I knew Elon was crazy. It's now everyone's going to revert and be like, oh, he's fine now because he's not with Trump.
Wow, the stock market is so volatile and so emotional. I mean, that's why we're in real estate. It's a bigger cruise ship to move.
It's much easier to control the mental, like your mental on it. I mean, it's you get it instantly on your phone. You can look and be like, holy shit, I'm down 25% right now. Holy shit, I'm up 50% right now.
I mean, what does this mean about the whole tariff talk? We don't know. Is it independent? But
I mean, they also talk about the tariffs. I mean, the U.S., like the actual, like the legal system, it's come out and said that like Trump can't, like, they're putting down on him, saying that he can't actually be imposing these tariffs now. And that's where I know I was listening to one podcast about, again, I don't fully understand how the US like electoral system works and everything, but like their House of Commons for what they need, if they get enough votes, they can just put his bill down and just like he has no control. And so that's where obviously that's where their court system might say you can't do this. And that's where it's I feel like we're in again very
Yeah.
uncertain times. Like what's going to happen, and that's just where it's changes every
Yeah, and then there was
freaking week
this
right now.
part of that post that I saw about Elon and Trump feuding was that Trump could possibly be on the Jeffrey Epstein list, but it's undisclosed right now. I mean, it's almost like who is not on that list and who is not on Diddy's list or who is not like, and yeah. And so, I mean, we'll see. Hollywood and even like, celebrities and politicians are, I guess it's going to come to roost pretty soon, or we'll see, or whoever gets mysteriously killed or died by a mysterious heart attack for no reason and all that, all that conspiracy theory that we watch about.
Exactly.
But yeah, other things, so bad news is, us mortgage holders, rates haven't moved, but the forecast is still on point with the banks that we're going to see, hope to see 2 more rate cuts, another 0.5% before the end of the year, barring any changes with the economy, tariffs, and all that stuff. I mean, when it comes to fixed,
yeah. Like I see it being July. Like it makes sense to me. We've held twice now, seen where the data's at. Like, yes, our GDP numbers are up. Yes, our dollar's doing better, but like our economy as a whole. Actually, I meant to throw up one thing. I saw someone put the cost of what food is increased in 2025. It is insane. On average, probably 15%. That's the true inflation here. And so, I mean, that's where it's again, why are we not stopping these companies? We say that we're trying to control inflation where they're just running rampant there. But I think July, I think they hold the rest of the year and then December. That's honestly my thoughts is at the moment. But again, that could change.
It's July 30th and probably like the second week of September and then October and December, right? Something like that. It's almost like every other month in a 6-week kind of interval, 6 or 7 week interval. But you know what? Even when it comes to fixed rates, I mean, there's some kind of volatility there. At one point, some insured and some special pricing on conventional mortgages at high dollar values or high mortgage amounts, they were in the high 3s at one point. I think maybe for like 2 weeks or for some period. And
like I got a couple people like November. Like November was kind of like some of the best rates that I was getting, like November of 2024. Like I think we were getting on average like 3.89, and yeah, that's
yeah.
it's much,
So I mean,
it's higher now.
Big Bank's 5-year uninsured fixed is around. We're looking at 4.44 to 4.49. So lenders have edged up. Rates, not because the bond market has been stabilized lately, but they're looking to protect their margins, and it's not just
And that's where, just so people understand the reason why, like not every lender can do a rate hold, but you can secure a rate for 120 days. So if the bank says, hey, I'm going to give you, let's say they gave you a 3.8, and now where the bonds are at, their profits are down. They're still making money on it. Don't get me wrong there. They want anywhere for where the bond's at. They price in 1 to 1.2 on top of that. And that's where like a bit of a tip here for people. Again, Alex and I have talked about fixed or variable. When you're taking a fixed rate today on a purchase, it's adding that volatility into it. They're increasing. So you're paying a surcharge for a fixed rate. If you take a variable rate, they're going to look at the bonds when you want to lock in. So you can actually track the bonds and be like, I'm going to call the bank today. Bonds are down, and you may actually be able to lock in at a lower rate. Even if you plan on taking a 5-year fixed, again, depending on the variable rate product you're in, sometimes you have to lock into a 5-year fixed, or you could lock into a 3-year, depending on what lender you're with. But that's where we had one guy, they could have taken 4.4 on a 3-year term. They took a 5-year variable. We looked at the bonds 3 days later after they closed. They got to lock in on a 5-year at 4%.
That's pretty good. And of course, you discussed the whole goals, your plans. Like you better darn well make sure you're not going to sell or do anything in the next 5 years, because if you refinance or break, that penalty is going to be substantial.
Well, that's where I mean, right now it's a lot of people, and again, for people to know of like maybe you have some debt that needs to be paid off. The hardest thing is like breaking. If you got a mortgage last year and like, oh my God, I need to refinance, your penalty's up a lot higher now. There was a small window. but you can always go and look at, can you get access to a home equity line of credit? Don't let someone say, hey, you gotta break your mortgage to get access to this. There could be other options. You could even get a second mortgage. It may be cheaper to get a second mortgage at, say, an 8% rate than paying a $26,000 penalty. And that's where you need to look at the entire picture.
Absolutely. Have a mortgage broker, mortgage professional look at your entire situation. We're able to help with refinancing, debt consolidation and such, but we cannot fix your spending habits. If you got into a situation where you're spending more than you make, which, frankly, it happens to a lot of us, it gets us here. Are you living the keeping up with the Joneses lifestyle? Then that things need to change, because if we refinance, great, that it resets your financial status. You are taking on a larger mortgage, but we want to make sure it doesn't come back again in a few years. Like, you go through this again.
Exactly.
So you got to fix the source of it, not the symptom. The symptom is, yes, we're refinancing, fixing the issue. We don't want to do this again in a few years. I mean, sure, we'll do it, but we don't this is not going to help you long term. So,
and that's where we have to remember, people, if you were to pay your mortgage off, you're at a 20-year amortization right now, but yeah, you got some debts that you want to clean up. And hey, yes, we could refinance you back to 30 years to make those payments lower. You've just added 10 years of interest. And so that's where, again, it's people don't look at that. They're like, oh, well, my payments are only that. It's like, yeah, your payments are only that, but now you've paid $180,000 more in interest. And so for me, it's coaching those people of, hey, we're doing this, but once you've got your budget under control, you need to start dumping money on your mortgage or invest.
And
you got to do something that's
oftentimes you have to do a personal assessment. Really look at needs versus wants. Ignore the whole consumerism that we live in North America. Like, oh, I need the latest phone. That's like $2,000 to $3,000. I need a new MacBook, or I need a new truck, which is like 120, 130 grand, $2,000 a month.
It's pretty funny. When I was a kid, I had to have, when I was younger, I had to have that newest phone. Every time a phone came out, same thing with that. I mean, now I'm like, if in my head, I'm like, I have to get 4 years out of a phone. If I want more than that, but if I try and get minimum 4 years.
I think the flex now that we're, I'm middle-aged, but you're approaching there, is the flex is not having a car payment. Like, who cares if you're driving a Range Rover and spending $1,500 a month? Who you're trying to impress? Nobody. At the end of the day, you got to pay for gas, insurance, and all that maintenance. And if it's killing you, then something's got to change. You got to, get a cheaper car, transit. Even for us, we had 2 cars, and we were not immune to the whole downturn in the last couple of years. We're down to 1 car now, and you just have to make those kind of adjustments to your lifestyle. Yes, it's painful, but you can make small and shortcuts. Yes, I mean, yeah, you can make cuts about the Starbucks and stuff, but it's probably not the big difference. It's the car payment that's a big thing.
Get rid of Netflix, man. You're gonna say you'll save $100. The big one is food. That's honestly the food eating out. That's the biggest one that I think most people don't account for. And when I sit with someone and say, hey, I can help you build your financing budget, but you need to go back and look at what's your expenses. Because in mortgages, it doesn't account for, there's some our formula accounts for some risk that way, but you could be spending $500 a week on food and I won't know about it. And that's where it's people need to understand, where's their money going. And I mean, if you're hitting tap on skip the dishes, you need to almost do it like a casino where I'm not allowed to do this. Get your credit card company to say you're not allowed to charge.
And one of the things to get out of debt prison is start paying, traditionally we say pay with cash, or just pay with debit in your bank account, not with credit. Forget the points, forget whatever the thing is. If you're in trouble and you want to get out of this cycle, is spend money with the money that you have. And then you'll be forced to make decisions that you know what, I can't go out as much. I got to cook.
I still do that. I buy big stuff on my credit card, but I've just mentally, I use my debit card. I find it, to me, when I use my credit card, is a double transaction for me. I'm paying it, and then I got to take the money from my
you got to do it instant, or else don't wait for the end of the month, because you're going to end up sending, put on my card. Oh, I want to get something else, and It's a want, not a need. And then all of a sudden, shoot, now you're carrying a balance, and then it kind of snowballs from there.
That's where when you see people you see people that have obviously there's times where, hey, you might be saving for a down payment, so hey, not paying off that credit card. But it always blows my mind when I see people with higher amounts of money in their bank account of say 100, 200, and they're sitting with a $20,000 or $30,000 credit card balance. I'm like, what are you doing? You're paying 20% interest rate. Oh, I want to keep that money. It's like, hey, we're just going to put a little bit less money down. Like you were literally
Yeah, I
just
mean, you're
giving
paying
money away.
20% on your credit card. I mean, if you have it in savings, you're making what, 1 or 2%. If you're lucky in a TFSA, 3%. Yeah, you're not
Yeah.
winning on the math game there. But yeah, so let's circle back on the whole interest rates here. The reasons why leading up to the Bank of Canada rate hold, the Q1 GDP came in at 2.2%, which was higher than the expected 1.8% increase. So that's one factor that contributed to their decision. Yep. And then do you want to touch on the next thing on a housing survey?
Yeah, that's where CMHC Housing Consumer Survey. The main reason for adding secondary suites, obviously, we know people that are wanting to do it, and it's the big one is to cover mortgage payment and
Yeah.
expenses. Now, unless it's for family, there's no way someone would have a suite other than for monetary reason. Which I mean, that's like obvious. Like, what am I just doing a suite, being like, hey, I want to have a renter in it for fun? I mean, it's for money, but obviously it's mainly when people look at homes now. Back in the day, people were looking at townhomes, single. A suite was like just not really, hey, I mean, Surrey's always been suites. I find Alex's neighborhood, you can just tell all the suites are in the neighborhood, and that's just how the homes were built. But it allows people to, I think, enjoy a much easier budget. And that's where I find, like, right now, everyone's buying homes with suites. It's cheaper for someone to buy a house at $1 million with a rental suite in it than go and buy a $750,000 townhouse
Yeah,
and pay
yeah.
strata
You
fees.
hit the nail right on the head. We're in that similar situation when we were buying in our area, and the difference between a house with a suite and a house without was $150,000. And so I was talking to my wife at the time. My first thinking was, oh, let's just get the smaller house with no suite. You get the privacy. Our mortgage payment is, this X amount. But my wife convinced me, get the bigger house with the suite, because if you figure in the rental income, your outlay is less. Now, of course, you're taking on a renter, you have to manage them, you don't have the privacy. So you kind of have to look at, apples to apples comparison. But yeah, we decided to get the bigger house, and our house has 2 rental suites, and it's really allowed us to live here, to be honest with you.
Yeah, that's where and again, it's just showing people like, hey, maybe you do this right now. Maybe it's not your forever home. You build a plan that way. And that's where I kind of find this study like just kind of weird of like, obviously it's to cover, like most people are doing it to cover, and you're making money. That's the main reason. As we go through, it's steady rental income for that long-term appreciation. Now that's where it's kind of funny. Again, depending on what type of house you have, some people will shy away from that suite because they don't want renters. So that one, and then offer a home to a family member. Obviously, we're seeing that a lot more, to be honest. And that number, I bet you, was smaller, but it's people, families, like the cost of living now is so expensive. They can't afford rent. They can't go into a home. So families are having to take
Yeah.
their family in, which I find again in Surrey and Vancouver is so much better. Like, I would say, I'm sorry, mom and dad, if you guys do listen to this. I love you guys, but us, we wouldn't work. We wouldn't live together well directly in a house. But I do, like, I see how other people do it, and I mean, it's great that they know that they're getting all taken care of.
I mean, more things on reports here from CMHC. This is kind of a sign of the times here. 17% of first-time buyers report missing a mortgage payment. That's a pretty starking number.
That's yeah. I mean, that's it. Definitely. And I mean, so I was 17, and I want to know what time frame this was. Like, was this 2024 fully? That's the only thing is I just going last at least one. Yeah, I would just be interested to know what the time frame. But I mean, obviously, this one report here, according to the latest report by Equifax, 1.4 million people in Canada missed at least one credit card payment in the first quarter. That is levels not seen since 2009. Like that's a very, and I mean, again, people have just been living on consumer debt. People have been living their life, and by living their life, I mean still going on vacation, still eating out every single night when they really shouldn't have
especially
been.
when rates spiked 22, 23. Our payments have went up everywhere. It was a shock, but people been able to shoulder it for, I guess, only a certain period of time. I guess savings have been depleted to make up the shortfall. And I guess people weren't willing to sacrifice parts of their lifestyle. So they've dipped into debt. And we can see here on this report, we'll have the graph put up here, the top 3 debt payments: credit card, mortgage payment, and auto loan. And we just talked about it earlier. The flex when you're older is not having a car payment. As long as the car runs, don't need a fancy car, just goes from A to B and have no car payment. It's like being out of slavery, modern day slavery.
That's the thing I always tell people, and especially when helping, like showing them, like, well, if you're already used to a car payment, you should take that money. I 7 years ago I got rid of mine. It was, and I've now taken that a month that used to go to a car payment, a monthly amount. It goes to an investment account now. My budget was already used to it, and I just kept that same budget. I didn't remove it because if I started being like, oh, I have this extra money, I just kept it and put it somewhere else, which is a much benefit for me than not paying a vehicle. And that's where I try and tell people is like, you're used to the budget, now do something that's going to benefit you for the future even more.
You know, as you pay down debt, use that same amount of money that you paid off debt, pay more debt, or like Alex said, use that same money that you're used to not having or paying towards something, put in an investment account, savings, build your future. All right.
And divvy it up. Like, don't take this, people. I'm bad. I am a hoarder of cash. I need to be better actually spending money and like enjoying stuff. And that's where, like, don't be like, I'm going to be so religious of like, I got to put $500 away. This is only for my future. Do 250. Do 250 away for the future. Do 250 for your now. Like, you do have to, if you're working hard, you do need to enjoy today as well.
The Financial Post is saying that, you know, according to Financial Post, economists are saying that the Canadian recession has already begun. We've been saying that probably for the last 18 months. Per capita GDP, we are in recession. Now, they go on to say that businesses and consumers are waiting for more clarity on what the U.S. relationship looks like before making major decisions. That's kind of permeating into the housing market, which we've seen, you know, probably the last 6 months, ever since kind of during the election time and during when Trump got elected president again. That's basically a sign of the times. It's kind of we've been seeing it on the ground for the last little while. So you're just confirming what we already know.
Yeah, exactly. That's where, again, they can kind of adjust their numbers how they want to see fit. They can make the numbers. And I mean, we go back to December when Chrystia Freeland talked about we're in a vibe session, saying that we're not actually in recession, that we're all crazy, that the economy is actually doing way better than it is. And it's like, okay, come on, like we're not all dumb. We can see what's going on out here.
So next up, according to a Desjardins forecast, Canada will issue more debt in 2025-26 than they did during the pandemic. And that is a very starking, eye-opening thing here. I wonder what that is. Do you think it's issuing more debt is probably like spending, financing, and just because I'm thinking maybe the last couple of years it's been restrictive and no consumer spending, and then when I guess the economy improves, as what we're hoping, as it recovers, that's when more debt is being issued because they want money to flow again, kind of thing. Is that what you make from it?
Well, I mean, I think even just like the government on a whole is going to be issuing more because like they're saying that they're going to buy capital and assets and stuff, and so I mean in a whole, and then they'll probably have some systems for businesses trying to promote some business, I would hope. But that's a bit of a scary number, like that going above there, depending on how much like the government's going to give out.
Tacks on to the announcement last week about the GST relief for first-time buyers on new builds. Yeah, it is only like maybe 2% of the population at this point right now, but we can see that growing as things progress along.
No, exactly. Well, the one thing here is the Bank of Canada has confirmed that 1 million foreign students allowed into Canada by the Liberal government accounted for a larger share of workers in low-skilled occupations, replacing Canadian-born workers. And so, I mean, I was just talking to some people, and it's their university. They have a degree and everything. They've applied for 40 different jobs. I mean, obviously they are working they want something else. Like they're not just going into McDonald's, but I mean, that's a crazy number. There's jobs not available.
I mean, we all knew this because, I mean, I've been talking about it, how my son's in his grade 12 year and all his friends are graduating and they're having a hard time as well. You know, we're not hating on immigrants, but, you know, unfortunately, Canada has allowed too many temporary foreign workers, foreign students in, and they've more than likely taken all the low paying jobs. And that's why youth employment is at all-time highs at 15% unemployment, which is such a starking number. Like, I don't remember being that high when you and I went to school.
I think when we looked at it last time, I think I think it was like 10%. I think when we looked at when we were doing that last podcast, we were talking about it there.
Okay, here's a interesting thing. So we all know that the pre-sale market has been deader than a doornail, like what I've said. Now, one development here in Surrey is looking to stimulate buying activity. The development's called Belvedere. Sorry, it's called Square 9 in Surrey Central, and they're offering Belvedere units. I'm not sure what that is. I'm thinking it's probably like the higher end units. They're offering it at 25% off for one day only. And move-in ready homes went for $720 a square feet, which was considered a steal, quote, compared to the usual $11.25 per square feet. Some buyers even lined up the night before. And I'm hearing, there was like, the lineup was like 200 across the block. It was almost like back in the day when I grew up before internet, we lined up for Ticketmaster and concerts the night before. So what does this tell you, Alex?
I just mean they're just being desperate, and also it's way overpriced. They're saying that they can knock off a 25% off the top, and they're still making money.
You know, a market we know we're in a down market, especially if you go to pre-sale centers, and they're offering so many incentives. No strata fees. Yeah.
Oh, I mean, some places.
Yeah, no strata fees for 2 years.
Like
we'll give you a huge decorating allowance. We'll give you free EV parking, all that. In a hot market, they ain't giving you nothing. You're just happy to get a unit. So the tables have turned. Pre-sale market is not doing well. And if you're in the mode of buying, now is a good time, especially lots of incentives out there to get things moving. So
yeah, well, I mean, I think that's probably a good spot to end it, Alex. I'm gonna tell you this: I am done for. It has been. I mean, I think I've in the last like 2 days, I think I got like 6 hours of sleep in total. And you're lucky I didn't just pass
before
on.
Before we go, we wanted to talk about a case scenario. Do you have time for this? Can we talk about this? Okay, we'll talk about one case scenario. I have two of them, but we'll save the second one for next time. So here's a scenario that folks that you might experience, you yourselves or your parents who are downsizers. So we have a situation here where seniors wishing to downsize, they need to sell their house. Let's say we're in Vancouver or the GTA. A single detached home, easily $2 million. It sounds like a lot if you're in the prairies or Maritimes. $2 million, holy crap! You can buy like a McMansion, but honestly, Lower Mainland and GTA, it gets you a standard house and nothing special. So they're looking to downsize, but they need to sell in order to buy the next place, either a condo or townhouse. Now, we all know that the current market is in all market segments. It's tough. Like, even realtors are turning down listings because some sellers are unrealistic. And in order to sell, you'd probably have to take a big haircut from the peak. And there's another vested group that's interested, like the children of the seniors. They want their parents to hang on because now is not the best time to sell. And they're hoping that they hang on for a couple years for the market to recover. Unfortunately, the parents are seniors. Time is not on their side. They have, depending on how old the seniors are, you have maybe 10 or 20 years left. So you don't have really time on your side to wait. So here's a situation that I'm working with a few clients. Here's a win-win scenario that will help both the senior parents and the kids. So here's the scenario. For the seniors, take out a reverse mortgage on the home. Because a reverse mortgage is technically an equity loan. And you don't qualify based on income. And they can get up to 55% in funds for the value of your home, and use those funds. So let's say for this example, $2 million house, 55% of the house is 1.1 million, and use that 1.1 million. You buy the condo in cash. Let's say the condo is like 800,000. Keep the 300 they can live off of. Now you still have the house. You have a reverse mortgage on it. You're not making payments to it. The interest does accrue. Now, the rate you're looking at is around 7 to 9% because that's an equity loan. Alex, you're probably saying, holy crap, that's a high interest rate. Yes, it is if you look at it from a individual standpoint, but the home does appreciate. What's the average appreciation rate in the Lower Mainland, Alex, would you say?
I mean, it's 5 or 6, but again, you get to choose it. Go even if you did 2%. That's where your home, and again, 2% on 2 million is larger. And that's just where, obviously, if you were to borrow at 8% for 15 years, interest compounds on itself. Also have to remember that is like, it's not just straight interest, it's compounding. And hey, that wouldn't be worth it. But this is where, like, if you have it set up properly of like, hey, we're going to do this for 3 or 5 years, again, you could do it in that down market. Even seeing where people do this because they don't want, maybe they had some stocks that they were going to go use to go buy this condo. While the stock market's down in some cases, back for a while, it was down 20%. It'd be cheaper for them to borrow at 9%, go buy it when the stock market's back up. Hey,
Yeah.
then we pay things off.
If you have imagine a graph, I don't have it on here, but 2% appreciation on a $2 million home is, you'll still gain faster than accumulation of 7% or 7% on a 1.1 million mortgage. So like if you look at a graph, it'll still outgrow the debt. Okay. So in a reverse mortgage, you'll never owe more than the home is worth. And they do make those promises like that. So you rent out that house, the existing house in the meantime, and then you sell it in a couple of years, whenever, 2 to 3 years or so. Once you sell the house, you pay off the reverse mortgage there. Here's a couple benefits to it. The benefit is you buy that condo or the townhouse in a down market, which means that $800,000 condo that you're buying today, it was probably 900 before, or 900 of a million. So you're buying at a discount, and you're not selling at a discount where you're at 2 million. It probably was worth 2.3, 2.4 at the height, right? You're getting the benefit of the buy, and you don't have to sell right away. So you're using the equity for you. Of course, this is a cost you're getting in reverse mortgage, but you can sell when your home recovers, when it's back up to 2.3, 2.4, or whatever. And the benefit is you're able to move on with your life and not have to wait, because my parents are 75. I don't know how much more time they have left. It could be 10 years. It could be 15. Who knows? Or it could be 5. We don't know. We don't know when our time is up. So for seniors, this is an opportunity or a strategy that you can employ.
And it's a living inheritance. I mean, it's great to say that our parents could be leaving us stuff, but why would they do it on their deathbed? Why not get to see the kids in the family enjoy stuff of like, hey, I plan on leaving you 200,000. Why not do it now so that you could actually see them? Especially for people that don't have homes right now, this is a really one of like, hey, I get to see my family inside of their own home. Yes, they could have maybe bought one once I passed away, but I get to be part of there. I get to go in there. That's like, that's life-changing.
Just to wrap up this scenario, this kind of gives you the win-win scenario where you take advantage of the down market and in the buying phase, and then you have the time to hang on to that property, rent it out, wait till the market recovers and sell. And you don't have to wait, and you can move on with your life, and you can enjoy the remaining years of your life with your family.
Yeah. That's right. Yeah, there's options out there, and I think I've talked about this before. A lot of people have a very bad stigmatism about reverse mortgages, and they just don't understand how it works. Again, hey, if you're going to go take this for 15 years, I'm going to tell you right now, not a good idea. That is going to cost you a lot of money. The other thing that people think, they think that they're going to lose their home. If I put a reverse mortgage on it, the bank now owns my home. A reverse mortgage is actually safer than a regular mortgage. A reverse mortgage is a non-recourse mortgage, meaning that if your value of your home actually drops, if the bank lent you $1 million, your home was worth $2 million, it's dropped down to $900,000 now. Guess what? All they can come after you for is the value of the home. You could have $100,000, $500,000 sitting in the bank. They can't come after any of that. If you had a regular mortgage and your home was worth $2 million and you borrowed $1 million and it dropped to $800,000, the bank, and you sell, you have to owe that other money. They're coming after every other asset you have. And so I just like to remind people that, because back in the day, reverse mortgages were a little bit scarier. The bank was able to just do whatever they want with it, but now it's set up and it's a much safer structure.
It's meant to be more like a shorter term solution, like a 3 to 5 year plan. Now, the scenario that Alex gave was quite dire. If that $2 million, like, we're not in the States where a $2 million home can go down to 900.
I like to go crazy.
If that $2 million went down to 900,000, me and Alex are going to scrounge up any investor money. We'll buy that house for 900,000 off you. I'm like, whoa, that's a steal. That's a discount.
And that's why they these lenders are outlining. That's why they only go to a 55% loan to value. And it's also age based. You can start to get a reverse mortgage at 55, and it's for male and female. They'll lend more
Yeah.
money to the female. Now, as you get older and older, they start to give more money, and that's because they're basing off like, hey, this person may only be around for 5 years, or this person might only be around for 8 years, and so they have a lot of modeling, and that is why it's a different type of mortgage than
So
a
folks,
normal mortgage.
I just wanted to give you this scenario because it is an option. Now, again, like we've talked about, even on the cash damming side, don't just listen to this episode, what we talk about, and all of a sudden go do it. Talk to us about your situation. Let's do an actual discovery call. We might have to talk several times with you, your kids, all together in one. Might have to do several meetings, modeling, go through all the objections, talk about all the features, the pros and the cons of everything. But it's definitely an option worth looking into, and not just kind of have to sell and wait and all that stuff. Here's another option to consider. All right. I guess Alex is really tired after a long day. I'm a little tired too. I guess we'll sit.
Yeah, you had to get up early too. And so, yeah, again, Alex, appreciate everything that you did there yesterday. It was awesome. And I mean, if we got any new listeners from the golf course as well there, thank you guys for joining us. And again, we're here to talk about what's going on in the market.
I guess I've become Alex's work wife. Holy crap. Not only the work wife on the pod and doing everything, I'm like, shoot, I'm the glue that makes the world go around here.
100%, man.
Well, folks, thanks for tuning in. Again, if you like this episode, if you find it of value, please like, share, and subscribe, and share it to someone else. So we like to grow our following. So with that, on behalf of Alex Shanks, I'm Alex Pang. Thanks for tuning in to episode 40 of the Canadian Mortgage Show. We'll see you next time.
Talk to you later.
Now, if you enjoyed this episode, make sure to like and subscribe. If you're listening on Spotify or Apple, make sure to follow us. Please give us a 5-star rating. You can even send us an email because we want to know what you guys want to hear about. That's what we're here for. Reach out anytime.